saying crack. You're not crack. People forget about the cold email. People forget about just picking up the phone. So I got a cold call on like a Sunday. Hey, I'm pivoting into email. I know VCs have a challenge managing their email. Would you want to be an early user? This is a big problem for me. Let me try it out. For me, it's like those type of founders are the ones that get me really excited, and those two tend to be the ones that are winning in a market like this.
Daniel, thanks for joining me on the pod.
Of course, here we are.
Good seeing you.
Excited to see. I'm excited to be here. Excited to see you too.
Yeah, hell yeah. Let's get into it. You work at Sierra Ventures.
Yes.
Tell us all about the firm and how you ended up there.
Yeah. I mean, it's kind of a long story. We'll keep it a little shorter this time around, but appreciate you having me on. I know this is a long time coming here. And so yeah, Sierra Ventures, we're based here in the Bay Area. We've been around since 1982, so currently investing out of our 13th fund, cool. $270 million fund. And we're focused primarily on pre-seed to Series A investments, particularly around enterprise software and deep tech. And so for us, a ton of the value add comes from having a very robust CXO network that we've developed over 2 decades. Obviously, very strong connections throughout the Valley. And so we're there very early with our founders on go-to-market, hiring, I guess kind of the classics that VCs kind of talk about. But I think for us, it's a bit different in the sense that most of the investors are former operators turned VCs or founders turned VCs. And so Tim on our team's like a 2-time exited founder, has a $3 billion exit, and then Shashank on our team has a $500 million exit. So for me, it's been great just to learn from these kind of investors, and obviously they get to see around the corners and really be value add for our portfolio companies. And the way I got there, I mean, it's like I said, it was a long journey in. I grew up in Seattle, first in my family to go to college. And so VC was not necessarily on my radar, but kind of through experiences I gained at Microsoft, even the University of Washington, where I took a class on VC, and I was like, oh my God, like this is the coolest job ever. And so these are all things that slowly started creep into the back of my head as I was like 5 years into Microsoft, and I figured the time was now. So I ended up going to business school, like I think many VCs. Ended up doing like 5 VC internships before getting to Sierra. As one of those, we're just kind of finding the next opportunity and just keeping the grind going. Similar to a lot of founders, right? All it takes is one yes. So for me, excited now to be on the investment side. Been with Sierra for 3 years now. Done 4 investments, primarily in AI and infra. So yeah, it's been a fun journey, and I think even more exciting being now in SF with the rest of the team here. So
yeah, amazing story. What were you up to at Microsoft?
Ooh, variety of different roles. I mean, I started off my first 2 years in the finance rotation program, 2-year program, did like 4 different roles. At one point, I was actually living in Germany with Microsoft and supporting sort of our team out there. But yeah, it was a variety of different roles. I spent 2 years in hardware as well, essentially on the strategy side, helping define a lot of our roadmap, pricing, obviously competing directly with Apple. Then I spent my last year on the corporate strategy team. So this was almost like an office of the CFO or office of the CEO role, where I was supporting Satya, the C-suite, on a variety of different things. I was in all the monthly meetings with the C-suite, and back in the day, we had people to actually sit there and write notes. Now we have granola, but I was the one, like the youngest person in the room, like writing those notes and ensuring there's a follow-up on the action items and things like that. But yeah, it was a great experience, obviously, my time there, and getting to understand what like a real top-tier organization is from the inside. So.
Totally, that's sick. You've done a lot.
Yeah.
Coming back to Sierra really quickly, for the folks listening, what are some of the like major investments you've done over the sort of long history of the firm? And then also sort of like, you mentioned a few areas that the firm focuses on. What do you think about today?
Yeah, of course. Going way back, I think we all use at this point like TurboTax. So we did Intuit back in 1992, nice. Led their Series A. But then outside of that, we've had other wins kind of in the modern era as well. Early 2010s, we had companies like SourceFire go public. They were doing like network security. We have a ton of other kind of exits in security as well. We've done companies like Treasure Data out there, more data infra. But in the modern era, it's been a variety of different things, right? It's always coming with that enterprise focus. So we have companies out there like Udia, that's AI for legal, and they're serving like the Fortune 500, air gap models. And now they're actually going out and looking to do that PE roll-up strategy as well, which I think is pretty exciting. Cool. And then we have other companies out there like Smallest AI, who I think I mentioned to you earlier as well, that's doing voice AI. What's interesting about them, it's a small model, so they can solve for the edge use cases that are pretty exciting. And then I have a few others out there kind of in data infra and throughout. But I think for us right now, very focused on sort of the next wave of enterprise software that's coming to market, very focused on embodied AI. And I'm particularly interested on sort of where things are going with AI native hardware, right? I think we're in the very early stages of what some of these use cases are going to be. We're seeing people now use things like Whisper, or even Claudebot came out, right? And I do believe we'll get to a future of like Jarvis, if you think of Iron Man and some of the things that we saw in those movies. Like eventually, so everyone will have a personal assistant or a personal sidekick almost that go and do whatever you want. So very early beginnings of that, and I'm starting to think through what that's going to look like in the future.
Yeah. First of all, huge power user of Whisper Flow.
Yeah.
Love it. I've spoken with Tane quite a bit in the past about his vision. And also got myself a Mac Mini recently to sort of try out the Claudebot thing, and just had Kate on the pod recently, who is one of the investors in the folks behind that.
Yeah.
You mentioned embodied AI, you mentioned a future with Jarvis. Like what do we need to get there? What are the like shifts that you're seeing that get us closer to that type of reality, and like what are you excited about?
Yeah, 100%. I mean, if I take a step back and I just think of AGI, right? You think of this future where AI goes beyond human intelligence. I think that kind of breaks down into two categories. One is the Jarvis that I mentioned, which I think is a bit easy for us to understand. But then the other piece too is embodied AI, so humanoids. And so I do think there will be a future where everyone at home has both a Jarvis and a humanoid, which then becomes, whatever you want at the home. It could clean your dishes, do your laundry. We're seeing some of those demos now. But for all this to work, right, we're still working on how to get models on the edge. We're still working through how these horizontal robotics models actually work. Obviously, a ton of edge use cases out there that need to be solved for. We're seeing world models now come about solving for some of those use cases as well. Voice AI has now become a lot more predominant, but then what happens after, right? How do you get these computers to actually see what you're seeing? Obviously, Claudebot was kind of a step in that direction. But even then, right, like we're still waiting to see what Apple does with their own hardware. We're still waiting to see what OpenAI does with their own hardware. So, it's a little bit of like this patience game. You don't know when that moment will hit, but I think for me, I'm just like actively thinking through what needs to happen for these things to actually come to fruition. So
yeah, it sounds like there's a lot going on, a lot that you're thinking about.
Yeah.
How do you kind of cut through the chaos of it all? Maybe like even like a more specific example of something that you have either recently invested in or gotten close to investing in, like what today, like what is top of mind?
Yeah. I mean, today, like frankly, we're going really deep on world models right now. And obviously over the past year, you've seen companies like World Labs go raise, and some of these professors go raise, like these very big rounds. And we're seeing kind of very early beginnings of what GPT-2 was a few years ago now with what's happening in world models. And so right now, obviously the model layers where most folks are attacking, whether it's video-based models, whether it's gaming-based models off things like Roblox. And the use cases vary. I think in the near term, we're seeing a lot of folks trying to develop more like content using these world models. And these models, just for simplicity's sake, right? World models are essentially just a simulation of the real world, right? So these are use cases across robotics. This could be autonomous driving. This could be content. And so you're seeing kind of early beginnings of the models, and then obviously as we move forward, you'll see more things on like the, let's call it infrastructure side, so like evals and things like that, and then obviously applications. In the near term, I think the applications that are like live right now, I'm seeing a lot of folks pitch us like what happens when you have unlimited content and you can become an AI native studio. You can create movies through prompting. And so those are things that like right now people are actively thinking about. But like I said, I think the ones we're most excited about are more on the robotics front, and how do you actually leverage these models to help a robot understand what the world looks like and the physics of the world, right? And perception and all these things that I think as humans we take for granted because naturally we just grow up like learning things and like it just happens. Whereas like LLMs don't have that ability to just continue to learn and get better, right?
Well, I think we have the benefit of having some pretty sophisticated sensors embedded in the way that we are able to like envision the world is just more. We have eyes, we have ears, we have a nose. I think within this space, there are a number of friends that I've spoken with who are sort of tackling some of these various problems, both at the beginning, sort of like data collection stage of the bottleneck to kind of get there, and also on kind of the last mile sort of implementation delivery stage. When you talk about humanoids, I think there's a lot of really exciting innovation happening within that space. And I think what people are starting to ask now is, how do we actually commercialize this or make it something that can actually be brought out into the world outside the lab?
Yeah.
Like, how do you think about these kind of constraints and bottlenecks? And obviously, it's a very hard set of problems to solve.
100%.
Like, how are you thinking about that as an investor?
Right, 100%. And I think for us, right, if you take a step back, we obviously saw a ton of the foundational model layer companies come out for robotics specifically. These are companies like Physical Intelligence, Skilled, right?
Yep.
And they're going for very horizontal plays, which I think makes sense, right? I think we see that with LLMs, and we all saw the power of LLMs, which are obviously language-based, but it's easy to be trained on, the internet,
Yep.
right? Like that's a lot easier. Whereas robotics, we just don't have that data, right? To your point, there's a lot of folks going out and trying to collect data, whether it's through teleoperations, whether it's humans wearing cameras and collecting egocentric data, right? But that's all going to take a lot of time. And so we're hyper focused on, how do you get to deployment quickly? How do you attack one specific vertical use case? And the parallels, like I said, are very similar to what we saw with LLMs, right? I think we all saw, these very horizontal models that could do a lot of different stuff, but the things that actually went into production with enterprises were the ones that were hyper focused on one vertical, a specific use case, could quickly capture data and then sort of feed the flywheel there. And so for us, we're once again really targeting companies that have a very specific use case, specific domain, and targeting, a very clear sort of buyer as well. And that kind of varies. I mean, we've seen companies go after solar panel installments using robotics. Other companies doing more of the humanoid plays. But right now, I think people are still trying to figure out where those use cases lie and where the willingness is to pay as well. Because
Totally.
Depends.
Cool. And sort of focusing on the founder.
Yeah.
You mentioned earlier a few sort of companies led by kind of the researcher type of founder coming out of the lab and building a company. Certainly, I've seen a lot of investment in pretty big rounds within that kind of profile of founder.
Yeah.
How are you underwriting, the people at the earliest stages building, and how are you kind of doing that underwriting in a way that balances kind of maybe like the need for capital and kind of the crazy rounds that we're seeing with like feasibility and I don't know, like being a rational person. Yeah.
I think it's hard, right? I think in this environment, I think VCs are encouraged to go and deploy quickly, get allocation in these rounds that are getting marked up quickly, right? And I think you got to take a step back sometimes and understand what everyone's own incentives are and why folks are operating in certain models. I think for us, we've always been valuation sensitive. And trying to find value in these hype cycles. And I think historically, that's what's enabled Sierra to be, investing for 40 plus years at this point. And so we think about it in a variety of different ways. I mean, the first thing is always the founder, right? I think that's the most important piece. But what's unique about the world that we're entering now with AI is that the type of founder has changed, right? Whether it's folks attacking the app layer, infra layer, we're seeing young founders, we're seeing older founders. I think the historical playbook of, hey, someone has to be at a company for 10 years, they're a VP of Eng, they're a VP of product, they've learned this problem over 10 years, they're now going to go solve it. I think that's kind of out the door at this point, right? And for us, we're always looking for unique insight. And that can come from someone that's been in the lab, like really deep in the weeds, but it could also come from someone that's like completely naive to the constraints of an industry and they're coming at it from like a brand new perspective and they're innovative, right? And they're thinking outside of the box. But I think the key question that we always try to answer is what customer discovery have you done? Who have you talked to? Why did you talk to them? How did you get in front of them? Because I think at the end of the day, you can have the best technology out there, but if you don't know the customer, you don't know how to sell, that obviously limits the potential of a company to that at the end of the day. And so no, those are some things that we are actively thinking about, but I think it all stems from trying to find the best founders early, which is hard to do in this market, but we're out there grinding.
Yeah. For the folks who are maybe coming from academia, do you find that there is more of a challenge when it comes to doing kind of the market and customer discovery piece and thinking about things from a commercial lens? Or do you find that those types of founders can fairly quickly build a commercial muscle. How do you think about kind of, bridging that gap between academia and
Yeah, yeah,
commercial
yeah.
world?
I think regardless of industry, regardless of pedigree, I think the best founders bring the right technical sort of understanding, and they marry that with true go-to-market, right, or like go-to-market expertise. And this could be, founders that have it themselves. They can do both hats, right? Some don't. Some are more technical, and then they find a sort of a counterpart that can kind of offset that skill set or add something unique to the table. And so I think just regardless of what industry someone is going after, like the best founders just tend to figure it out,
Yep.
and they usually figure it out before they get to us. Right, they're already internally thinking about these things. They're already proactively going to talk to customers, and they're just curious. I think those are some of the best attributes I see in founders that are able to, have impact and scale quickly. Right, because we're all looking now for like the 0 to 5, 0 to. I think the metrics we knew in SaaS are like completely out the door. Right, so everyone's looking for velocity and how you can just run quickly. So
Yeah, and it seems like the balance of power between sort of like, or the focus on product over the focus on go-to-market has shifted in the last couple of years.
yeah.
How do you think about that balance as you think about new businesses that you're backing? How much more has the go-to-market muscle kind of become front and center?
Yeah. I think, there's been a lot of posts on this lately, right? You can't teach taste, or I don't know, there's some posts on taste not too long ago. And I think, for us, there has to be product depth, right? I don't think defensibility is the defensibility we thought of, in prior cycles where there's very unique IP, very hard to replicate. And yeah, I think those are very important things, right? But I think what's more important is developing like a sticky product, right? And so there has to be depth to the product in the sense that you're solving the workflow end to end. There's clear time to value. It's an easy integration, right? And just ease of use, right? Like these are all things that I'm proactively thinking about when I'm evaluating a product. And you saw companies like Lovable or companies like Cursor, right? And these are products that, those are the ones that were able to get to market quickly because people just loved them and people loved using them. Yep. And so those are things that I think about. I think there has to be that product depth, and you have to create a product that people love, and naturally the go-to-market will happen on top of that. But people got to be scrappy. They got to be willing to take those cold outbound, or be willing to do those like 300 cold outbound calls. They got to be willing to just be told no. They got to be at events. They got to just be super scrappy. And so I think it's a balance of both. But we're seeing definitely go-to-market become more of a wedge in this day and age.
Yeah. People got to be scrappy, but they also, I think, benefit when they have sort of the unfair advantage that someone like Sierra can help bring to the table.
Yeah.
You mentioned having a robust network of sort of CIOs and CTOs from the Fortune 2000 and beyond. How do you work with that sort of bench of talented senior executives and experienced folks and have them interface with the startups that you're working with?
Yeah, yeah. So I think, our process is a bit simple, or at least I think about it in simple ways. I mean, I think in venture, it's all about taking these hard problems and either building frameworks that just simplify what you're doing. And the two things we love to validate is going back, like the depth of the product technology, but then the second piece is, can we get you a customer, right? And so that happens naturally through our CXO network, right? And the first thing I'm really trying to validate is this really a hair on fire problem, or is this like a VC created problem, right? And we're seeing a balance, or a little bit of both kind of in the market. But the signals I look for is, I'm reaching out to a CXO. I'm like, hey, I just met this company, really exciting product for XYZ reasons. Curious how you're thinking about it. And you'll see naturally the momentum that happens once someone's like really excited about something and there's truly solving for a problem that, holy shit, like I've been trying to solve this for like the whole year. Here it is right in front of me. Let me get on the call tomorrow with the CEO. After that call, they're looping in the rest of their team, right? They're signing the LOI immediately after, right? And so those are the signals I look for when we are getting founders in front of our CXO network. And I think if you're solving for a hair on fire problem, I think that's like the clearest way or clear indication that you're solving for the right thing.
Totally. And what about for folks who don't have that unfair advantage? Like, what's your advice to sort of, founders who are looking to validate demand with real buyers early on?
Yeah. I think this goes back to just being scrappy, right? I mean, there's so many different stories I've heard of founders literally going out, talking to customers without a product. But once they have an LOI signed or there's customer interest, they'll go build the product, right? And so it's all about just going out there. We're all on LinkedIn, right? All this information's public. I mean, I just love a cold email. Like, people forget about the cold email. People forget about just picking up the phone. I mean, one thing that was super interesting that happened to me was actually I was working, I was using a product called Slashy, and this is like a YC company. This is probably about a year ago. And initially they were AI with hands, right? And it was pretty much just like the last mile that like GPT couldn't do. And I was an early user of that. But the team wanted to pivot into something a bit more challenging, right? And so I got a cold call on like a Sunday by the CEO of that company telling me, hey, I'm pivoting into email. I know VCs have a challenge managing their email. Would you want to be an early user? I was like, well, I'm a superhuman power user. This is a big problem for me. Let me try it out. And so that following Monday, they onboarded me onto the product. And now it's been like 6-7 months and I've been co-developing this thing with the founders, right? But it all stemmed from like a cold call I got on a Sunday. I'm looking at my phone like, whose number is this?
Yep.
Right? And I'm like, all right, like, let's go. And so for me, it's like those type of founders are the ones that get me really excited. And those tend to be the ones that are winning in a market like this.
Yeah. No, and it's so fun getting to partner with folks, figuring out what the next sort of best step is and sort of partnering with them to develop it. And I would love to learn more about Slashy because I also have a serious email problem. Since you started investing in 2023, what have you learned about underwriting AI companies that you maybe didn't fully appreciate or understand at the beginning?
Yeah. Well, I think just coming in, I was a new VC, eyes wide open, and I just didn't appreciate or really didn't understand just how hard it really is to sell into the enterprise, but more importantly, getting into production. Obviously there's a gap between what I'm seeing in terms of, a founder will present, hey, we're at, $1 million in contracted revenue. And then I'm like, okay, that's great. Like, it sounds like things are moving along pretty fast, but then you click in a little bit deeper, and you ask, well, how much of that is live? And they're like, oh, only 200,000 is live. And so then you start getting into the weeds a bit of like, what's that delta? What's driving sort of the long, the timing for this to start becoming live ARR. And this is doing part that enterprises just move slow naturally, right? There's security reviews, they have to get the right teams onboarded, there's got to be, integration set up. And so I didn't truly appreciate how hard it was to sell into the enterprise and get these things to actually work in production. And that's kind of changed a little bit how I evaluate companies now as well. I'm thinking through just ease to deployment, how quickly you can get to live ARR, going back to like the depth of the product, right? And how are you really thinking about just deployment of it, right? So these are things that naturally I think over time I've picked up, but that's something I didn't appreciate 2 years ago, was just how hard this stuff is to actually get into production.
Yeah. How do you think about, for companies that are selling B2B, the question of going after enterprise first versus, finding a smaller wedge and validating something smaller, just given the complexity and the sort of time cost of trying to sell into enterprise?
Yeah. I mean, I think once again, the frameworks, right? Keeping it simple. I mean, there's two ways to build a big company. One way is smaller ACVs, but very short sales cycles, right? These can be companies going after like the mid-market, but they're able to scale quickly because they're selling fast, sales cycles of like weeks to months, right? Then the second way to build a big company is like very large ACVs, enterprise style, $1 million plus contracts, but these are slow, right? But at the end of the day, I think that there has to be a narrative and a story on why you're starting, where you're starting, and where you plan to go. There's a lot of times where companies do start off going after, mid-market or sort of, smaller ACV customers, but they understand that, hey, I'm doing this just to build out the product, get more feedback, collect data, improve the product, make it enterprise ready to then go sell for those larger contracts. But there are some people that just want to start with enterprise, and that's doing part that it's going to probably take you the same amount of effort in terms of product development, getting an enterprise ready, as it would working with the smaller customer. So why not just go to the big customer to begin with? And so I think there's different ways to approach it, but I think naturally as an enterprise focused fund, we tend to kind of think through how to best get into those higher end customers, if you will, that have the highest willingness to pay. And what's interesting now is you have sort of top down a strong push across the board for teams to adopt AI technology. And so the historic 12-month cycle of enterprise is kind of out the door, right? Because we're seeing these companies go from like 1 to 10, 1 to 20, 1 to 35, right? And they're selling enterprises. So clearly, if you're delivering a product that shows, once again, time to value, ease of use, right? Like these things just naturally happen, and they happen a lot faster than what traditionally would be the sales cycle.
Yeah, it sounds like enterprises are maybe moving faster in terms of their ability to actually close on sort of new tooling. And it sounds like maybe correct me if I'm wrong, but are you maybe less concerned about having sort of revenue traction at the stages that you're investing in, given the audience and nature of that sale?
So I think revenue is important, right? I think having some sort of traction or indications of traction are important, but we do always say that traction can be like deodorant. It can mask problems that are existing in what you're building.
Totally.
And so we do kind of hone in more on the why rather than like the dollar figure itself. Like, how'd you get in front of this customer? Why were they excited about you? Was there a bake off? And so we're not necessarily always concerned about revenue. We're more focused on, is this truly solving a problem? Can we then layer on our network to then help the company skyrocket? But at the end of the day, it's all up to the founder, right? Like, I think for me, I've shifted, maybe going back to your question on 2023, I've moved away from focusing on seed and A at this point. I think right now I'm mainly focused on seed and pre-seed and trying to get there super early with these founders. And there's been, companies that we've invested in where it was only the CEO. They didn't even have a CTO, but we're so impressed by the founder where we're willing to take the risk of like, hey, we need to get into this round right now. We'd love to back you. Let's help you then figure everything else out. So if there's conviction on a person, I think everything else tends to just kind of figure itself out. And I think that's the name of the game in venture. It always comes down to the founder.
It seems like everyone's going earlier and earlier and earlier.
Yes.
Not a new talking point at all, but how do you make sure you're getting the best deals at the early stage, since everyone else is starting to crowd in at pre-seed, it seems like?
Yeah. Well, one thing I'll say is there's no proprietary deal flow. Let's be honest, right? I think it's all about just surrounding yourself with the right people. Obviously I moved from New York to SF about a year ago. And the ecosystem out here is, in my opinion, honestly, a little more community driven. You have to be in these pockets of folks that are thinking of building, but they're not there yet. And so I'll spend time meeting with folks at, a lot of these top AI companies that are thinking of starting something, but they don't know when. And I'm there just to lend an ear, just to be a friend. And naturally, they'll introduce me to their friends. And naturally, that sort of tends to compound. But you really got to find the right pockets, right? Whether it's spending time with the folks on the cutting edge of research. So this could be folks in labs. These could be folks in PhD programs. Or you're spending time with exited founders, or you're spending time with young founders, right? Like, there's different ways to cut and slice it, but I think for me it always comes down to just naturally being a friend for people, and everything else kind of comes after, and just ensuring that you're in the right rooms with the right people, I think, is more important than anything else, and everything else kind of just tends to follow, right?
Making sure you get that cold call on a Sunday.
Hanging out with you, I mean, that's been helpful too.
For sure. Happy to help.
Yeah.
Cool. And coming back to just like the future of AI within enterprise, like, what do you think 5 years from now looks like?
Yeah, it's gonna be pretty interesting, right? I think we're starting to see a lot of different signals. I think a year ago we were asking ourselves, well, when is AI gonna take over our jobs, right? And we're starting to see that with, for example, Block, I think last week, 2 weeks ago, right, laid off very significant portion of their workforce. And rather than doing over, several different layoffs, they were like, let's just rip the Band-Aid off now and lay people off now. What was crazy is their stock went up after that, right? And so you're starting to see that happen more. You're starting to see more of these sort of reports out there. Are we underestimating where AI is actually taking us? I think there was a Citrini research thing came out, right? And they're saying, are we,
the market.
right, exactly, that tanked the market, right? And so we're starting to see early.
Not even a real equity research firm, as far as I understand. Yeah.
And so these things are starting to happen now, right? So that's more on like the workforce aspect to this, but that leads then to, there will be a future where most of us are almost like supervisors of these agents, right? The agents are going to go execute everything for us, and we just sit there and we review. And I think other folks on the podcast have mentioned that too, but that's the future where we're heading, right? And so that's something I'm actively thinking about is, how enterprises are going to adopt AI internally, what their organizations are going to look like, and what happens when we're shifting all now to like systems of actions and AI is just doing the output for us, and we're just sitting there and we're reviewing. But then you can blend in a little bit of what I mentioned with these AI native hardware, how people are actually going to interact with AI, work with AI. Like this is all shifting as we speak. And so in 5 years, I do envision like there's a world where maybe phones don't exist. We're talking to our computers. And I just don't know what that looks like, right? But these are things, like I said, that I'm thinking about.
Do you think, again, I was at this breakfast or something with some investors, and the question of kind of the power shifting away aggressively from labor and toward capital was one that kind of came up. And I think the question was sort of like, do we get to a state of the world where there's like 80, 90% unemployment, or do we just have a crazy, wild new set of jobs that look wildly different from what we're doing today? Like, do you think it's like the robots do everything for us and we're just like creatives now and everyone's on TikTok? Or what does the future look like from that standpoint?
Like, where are humans going? What are we doing?
Yeah, that seems to be the question.
Yeah. I think that's something I grapple with too, right? As like a human and then investing in AI.
Yeah.
I mean, the easy answer is like, I just don't know, right? And once again, are we underestimating where this is all going? I do think that humans are good at finding more work. Like naturally, that just tends to happen. You think of like the calculator, right? Like people use the calculator, now they're doing more math, right? Or Excel, now they're doing harder reports. And so I think agents will just enable us to just do a lot more, and we'll figure out new ways to be busy. What I think I'm concerned more about is what is the willingness to pay to hire someone, right? Like, is it 50,000? Is it 100,000? Will there be universal basic income at some point? Like, those are the questions that I kind of think through, especially like, coming from some of these communities, right? Where, folks that come from Latino backgrounds, we don't all have access to this stuff, right? So for me, that's something that's definitely top of mind for me as I think of investing in AI too.
Yeah, totally. Without getting political, there's definitely like a question of like, if it all concentrates in a few major sources of AI capital, what does kind of governance and humanity look like?
Right.
Very interesting questions.
It's interesting. I think going back, it's like the K-shaped economy, right? The haves and have-nots.
We're already seeing.
And we're seeing early of that. Even within venture fundraising, right? You're seeing, the funds that are established being able to go out and raise, whereas the ones that are still trying to prove themselves are struggling a bit more, right? So you're seeing that in a lot of aspects, I think, in life right now.
Yep, totally. Pivoting to our sort of rapid fire espresso round questions.
Let's go.
Let's do it. What's one view you hold about the market that most investors would disagree with?
Oh man, I thought about this one. For context, I've done a lot of work in cybersecurity. Still have yet to make an investment in cyber.
Okay.
But I think as a U.S. investor investing in cyber, it's almost unattractive. And I'd say that because a lot of the talent is obviously not US based. The ecosystem is not centered around the US. And so the best companies aren't coming out of the US. It'd be almost like an international investor trying to get into the best AI deals. I think for us, naturally, it just becomes hard because we're not sitting boots on the ground in a place like Israel that has that type of talent, right? And so I think at the very early stage, if you're like a seed investor, which is the only time to get in because the prices then get ridiculous after, right? It's so hard to pick out a winner. And you take something like non-human identity, which was super hot like a year and a half ago, everyone picked their horses. We all thought that was gonna be a huge category. Everyone's pivoting, right? And so I think for me, cyber is one of those categories where I don't know if it's investable. It's a tough one, especially at the seed.
Makes sense. What's one conviction that you've completely rethought in the past year?
Yeah, I mean, going back to robotics, I mean, I thought these horizontal models were gonna work, but they're not. And they're taking a long time to get into production and for them to be useful at the end of the day. And so that's completely changed. Now going back, we're looking for these hyper-focused use cases, who can get to production the fastest, and who's lightweight enough to just move quick.
Is that a timing thing? Do you think that horizontal sort of?
I don't know. I think that's a tough question, right? Like, at what point will we have enough physical data to be able to go make useful models? And I don't know when that time will come. And so the ones that are going out and collecting data straight from the factory are the ones that I think are exciting for us right now, that are, once again, moving fast, getting things out there and feeding that flywheel, which is what you need in robotics.
Totally. What do you think is the biggest risk in venture right now that people aren't pricing in?
Yeah, I think one thing that people are kind of overlooking is consumer. And I think even as an enterprise-focused investor, like, I'm seeing human behavior change because of how people are using AI. Whether it's now moving from searching on Google to searching on OpenAI for like a new pair of shoes, whether it's using Whisper to now speak to your computer, like, human behavior is starting to change. And I just don't think we're actively thinking through the use cases that happen once we have this AI native hardware, right? Whether it's these glasses, whether it's earbuds, whether it's an at-home speaker. And so that's something that I'm actively thinking through. And why has no one disrupt like Instagram or like, I guess TikTok's been around a little earlier, but why is there not like an AI native social media platform, right? So I think consumer behavior is shifting as AI obviously comes to market. At some point there will be, like, people love companions, right? People are using AI as a companion to talk to. There will be a point in time where we all have like Wall-E's at our home as like our best friends, right? Maybe dogs will get replaced, I don't know, but that's something I'm thinking about.
Cool.
Yeah.
What's a company, founder, or sector that you're just like fascinated by?
Oh my God, going back to these world models, I'm telling you.
Yeah.
It's just one of these things where you can kind of just see where we're all going, and how impactful some of this stuff can actually be. Because at the end of the day, LLMs are constrained, right? They only understand text.
Yep.
We can kind of give them an understanding of how physics works. We can give them a VLA, VLM to then enable them to see. But at the end of the day, they don't understand causality. For example, as humans, we know that if we flip a coin, there's a 50% probability that it will be heads. And we know that because we've ran enough simulations growing up to know that that's just going to happen.
Yep.
Models don't have that natural ability. And so these world models are really what's going to get us, I think, to that last mile and get these robotics to actually work. So that's where I'm like super, super interested on right now.
Cool. What is a founder red flag that you think is actually a green flag?
I like founders that are just not performative. And that could be a variety of different ways. Founders that are like really blunt in a meeting. Founders that are telling me why another VC passed. Right? And I think I appreciate that because they're not giving me, they're giving me a full insight. They're not giving me who they want me to think they are, right? They're giving me who they actually are. And there's a lot of, I think I appreciate the honesty and upfront with those bold founders.
Last question. What do founders consistently get wrong about what VCs actually do?
We're doing more than just writing checks. I think
Clearly.
Founders forget that we're also selling, right? We're selling founders capital, but at the end of the day, we're also selling our portfolio companies to our CXO network. We're selling them to the rest of our network. And so I think, beyond just writing capital, we're also helping out, and we're not just on the sidelines, but we're here to help. So maybe that's another one.
Awesome. Well, this was an epic conversation. Thanks so much for your time, and thanks for being on the pod.
Awesome. Thank you.